Hey, what's going on? Welcome back to the channel. In this video, we're going to be taking a look at Egld. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. If you haven't seen the previous update, make sure to watch that before watching this one. It's going to be linked in the top right-hand corner of the screen. Now, let's jump straight into the TA. So taking a look at Egld on the daily chart, we still have the same Fibonacci retracement. If you don't know how to use the Fibonacci retracement, there is going to be a link down below in the description where I explain how to use the Fib retracement, set some targets using the Fibonacci resistance and support levels. So watch that video if you're not familiar with the Fib and then come back here. So we have the swing high in November of 2021 and we have the swing low in June of 2021. And as you can see, we went below the first Fib level. So our target instantly became the 1.618 at $12.80, but we haven't even bounced off the 1.272, which was the minimal target at $28.50. So this is kind of bullish because this does show that a lot of people are buying in this area, and in this area here there's a lot of buying pressure and the price is starting to move to the upside. However, the last time we had this bounce, we had a little relief rally and then we had a move to the downside. Right now we had a little relief rally and we're starting a move to the downside. So let's see where we can land with this move, because I did show an Elliott wave structure on the Binance chart last week, and that is sort of playing out right now. So we're going to take a look at that a bit later in the video. But for this chart on TradingView on the daily, as you can see, we're breaking down from the channel up pattern, which is very typical of these patterns. You have a move to the upside, and then you start to break down as you lose this support level. And right below, we have the golden ratio at $40.60. So this is a different Fib. As you can see, this is a smaller one with a swing high in December and the swing low that we printed early January. So we ran into that same resistance level, into that same high here. We retested that, and now we're getting sent back down. And potentially the golden ratio is going to hold us up, and we're going to see a move to the upside from there. We could go down to the 0.5. That could happen, and you may see a move to the upside from there. But I would be setting up the buy limit orders in this area. In fact, I do have a buy limit order set up for Egld right now, and all about my buy orders, all about my trade alerts, all about that you're going to find on Patreon. So if you want to stay up to date with my portfolio, you can check it out. There's going to be a link down below. But right now we're holding the 55 EMA on the daily chart, and I would say if you want to dollar cost average, this is probably a good area to do so if you don't have any Egld tokens right now. If you do, it's okay to wait. You can, you can adjust the risk a bit, and you can just set some orders lower because you already are exposed to the project and you simply want to add to that position. And this is a pretty important level here at $40.60, as we have retested that multiple times during the fall of 2022. We went and retested this back in June of 2022. So hopefully this is going to be a nice and easy, smooth back test of support, and then we continue to the upside, because ideally we want to print a higher low here for the continuation of the trend, and we want to break this high, finally break this high that we printed in December, and we want to move further up, at least taking out our 1.618 target here at 58.5 cents, or $58.51. From where we are, that would be 37% move to the upside. From the golden ratio, that would be 44% to the upside. And you can see that there is a swing high here in November of last year, which also has a similar channel up pattern. And we dropped from that one quite, drastically because of the FTX crash here. We got some bearish news regarding staking in the US. So Kraken is going to be stopping its staking features on the exchange in the US, from what I can understand. And with that little bit of FUD, the markets are starting to drop. And plus, we did need to see a healthy correction, as I discussed in the previous, updates throughout the week. So you do have a couple of support levels based off of this Fibonacci retracement. If we jump into the daily RSI, let's see what's going on here. You were having a bearish divergence as well, because the highs that you were printing on the price action were higher highs, but the highs on the RSI were lower highs, as you can see. And this is called a bearish divergence. This is when the price seems to be going up and up and up, while the bulls are starting to lose their power. And this typically means that we're going to see a pullback at some point. And a pullback we got, today and yesterday, actually, February 8th. Right now, we opened up a new candle here for February 10th. Actually, it was February 9th that we got the pullback. My apologies. And the RSI, if you're looking for a really good entry, I would target the purple box below, because that is your incredible buying opportunity. Every time we were there since January of 2022, we had a strong move to the upside. Every time without a doubt. So if you want to make some short-term money or mid-term money, or even you're buying for the long term, this here is an incredible buying opportunity. So I would advise you have this support block laid out on your RSI, and it's really easy to set it up. You just pull up this rectangle pattern or rectangle tool, and you just slap it onto the chart based off of these lows that we printed in May and June, and based off of this one local low in May. So this area here is in the oversold, obviously. So even without this support block, you should be aware that that's an incredible buying opportunity. But with this support block, there's even more certainty of, for you to know that it's time to buy. So let's jump into the Binance chart right now. And before we continue with the video, I quickly want to mention my Patreon. Now, there's going to be a 7-day free trial for anyone looking to join. You get access to all of my content since October of 2021, which is when I started my Patreon, and you get access to my low cap gems, podcasts, episodes, my portfolio, all the trade alerts, seller alerts, buy alerts that I'm posting there. So everything that I've been posting, hundreds and hundreds of posts, everything is available for you to enjoy for 7 days. And if you decide to stay, obviously you're welcome. If not, let me know what you didn't like. But hopefully everyone is going to enjoy it, and that's a great way to support the channel and get extra exclusive content. So thank you very much, and let's get on with the video. So jumping into the weekly chart on Binance, as you can see, we do have a different Fibonacci retracement setup with the swing low that we printed at the end of December and the swing high we printed in November of 2021. Our minimal target is going to be at $869 in the bull market, with the 1.618 sitting at $2,123, which is a bit far-fetched in my opinion. I don't think we're going to be going that high, which is, it's 4,842%. We could do that, but I just wouldn't be counting on it, because you want to stay conservative at all times. Because if you don't, and you're going to be this perma bull, you're going to get wrecked for that, and you're going to be left with your coins when we start dumping once again. And this is the Elliott wave structure that I talked about. So we run into the 20 EMA on the weekly, and then we have a pullback to the bottom of the support block here. And that's exactly what we're doing right now. Hopefully we're going to see a pullback all the way down to $35. That would be an incredible buying opportunity. We simply print a higher low, and then we continue with that wave 3, hopefully taking us towards $60, maybe $66, maybe the 55 weekly EMA. Then we have a pullback, potentially taking us back to the 20 weekly EMA, or for example, this top of the support block, and then we have our wave 5. So this little fractal here hopefully is going to play out just like that. We'll see about it. Obviously, I can't see into the future, but this is what I would be expecting. And if it doesn't play out like that, well, I don't have a